Welcome to Markets Now. I'm Michelle Rook with Mike Miner, Professional Ag Marketing, and we ended mostly lower with the exception of Chicago wheat and a few of the hog contracts today. And Mike, let's start off talking about soybeans because we saw some double-digit losses, but meal and soybean oil were both lower. So did we just see profit taking, or what was going on in that market today?
There was a couple different stories. So on the overnight with the weakness that first started, I was noting that as more of profit taking, kind of ahead of the holiday, and then maybe some of the heavy rains that we saw continue in southern Brazil that had expanded the showers into central and northern Brazil. So that was a little bit of the talk, I think, on the overnight. But then as the day developed, another story really broke out, which soybeans kind of got under some more pressure towards the close today after some weakness with lower soybean oil futures. They've been following along with the crude oil here a little bit. So I think that was worth noting on kind of how the futures ended the day, Michelle, versus some of the weakness from the overnight. But overall, a little bit of a red day on the old soybean market today.
Yeah. But as we mentioned, the profit taking in part because we had a good run up in beans the first couple of days of the week, and we just could not get through resistance areas on the charts again, could we?
No, when I look back, it's been a really long-term development that we get November 24 soybeans, which I think is something farmers should really start to be looking at or gauging for this next year. From a seasonal perspective, I think it's a good idea to keep that in mind as we start to get some South America weather rallies. And we hit up against that 1320 mark again. We tested that back in February and July, in August, and now in November once again, and we failed to break through that level. And I mean, you're only 6% off that contract high anyways, going back all the way to April of 2022. So I think that's going to really grab the attention, and probably why you saw some of that technical weakness spill into the soybean market ahead of the holiday.
Yeah. But Mike, after the holiday, we could negate that pretty easily if the forecast for December in Brazil still stays pretty dry, right?
Yeah, this when I look forward at the forecast for Brazil, January is going to be their really critical month. They're only about 70% planted on soybeans right now in Brazil. We've had early weather issues to really get this market into a frenzy real lately. So we've seen some choppiness already, which it's pretty early to see choppiness from weather with them only being 70% planted. So maybe there's a question that, are we going to shift some acres towards other things or not? It might be a little bit early to tell. I've heard rumblings about more acres going to cotton down there and things like that. But I think the focus here going forward is just going to be weather volatility, mainly in that December and January timeframe for Brazil, which would be more like our August, really, in the United States.
Yeah, and maybe at that time, then the corn market will start perking up here in addition because of South American weather. But so far, it has not. In fact, the corn market feels kind of stuck.
Yeah, it's been stuck. The funds, they still remain a bundle full of net short contracts that's
Yeah.
been weighing over this market, them and wheat. It seems like at this point we can't get the corn market really excited about any Russia Ukraine news, which is disappointing. We've been in this sideways pattern in corn now for a little while, and it's building a little bit of a wedge that you could probably expect to hold until something like the January report coming out in January there for the WASDE. Maybe that'll spur something, maybe a little bit of South America weather at that same time frame, like you mentioned. So it could be stuck in a sideways pattern for a little while here, just because it doesn't seem like there's anything up front here to get this corn market excited in either direction, Michelle.
Right. And on top of that, Mike, you do have ample supplies. I mean, carry out over 2.1 billion is pretty ample, isn't it?
It is. And you're going to have to keep that in mind as we start to really get into the back half of this marketing year. As you've got corn in the bins, farmers have been an incredibly slow seller up until this point. So we do not want to be the last person to sell corn in the United States this year. That's for sure. Just keep that in mind as you're trying to make some marketing decisions when it comes to basis. And, when I look at some of the carry situation today, we've built in a nice chunk of carry in this corn market, which is going to help incentivize some farmers to maybe keep things around a little bit longer. The Eastern Corn Belt, we have very poor basis levels at this point in time. So keep that in mind as you start to roll contracts out that, maybe getting rid of it a little bit earlier this year. The worth of money is worth a lot right now. And then you've got 2.15 billion bushels at the end of the line here that could catch up with farmers as selling occurs here into the summer.
Yeah. And I know you mentioned the rolling. We have first notice day coming up, option expiration. So there's probably some hedge pressure coming at that corn market, keeping a lid on things as well. Now, we did have a little bit of export business this morning on corn, but also 4 million bushels of SRW wheat to China. And that seems to be the only thing that held up the Chicago wheat market today.
That wheat market's been incredibly disappointing. Like I
Isn't it
mentioned on
awful?
corn, yeah, the wheat market you haven't been able to get to move either on Russia-Ukraine news, really, with the Cargill ship last week, and you had some other Odessa pressure here this week. It's a struggle. It's stuck. And when I look at our export prices right now on corn and wheat, we are getting more competitive from a global aspect, especially compared to our competition in South America, as they've run slim on supplies. So we could see some nice exports for the next couple months. I saw China's been a little bit more active for that Jan and Feb timeframe now too on wheat, which it's not a surprise at this point, given what our prices have done and what other competitive supplies have done. Keep an eye on Russia-Ukraine exports, though. They continue to find plenty of wheat to export, it seems like, and I would keep that in mind in that part of the world.
Yeah, it's hard for us to compete with that, that's for sure. But demand has certainly been an issue for the wheat market. Cattle, let's move over there. A lower day overall. We had some 177 and 280 cash trade. Was the market a little disappointed with that, you think?
A little bit, it's steady to a little lower on the week here. Again, on cash, we can't quite get that thing to stay steady or move back higher here real recently. When I look at the cash market, it's higher than the futures, which that keeps motivating more cash sales, especially from a hedger perspective, right? That's working really well. So that's part of it. And cutout's been going pretty steady sideways here. So packer margins are probably growing ever so slightly now again. We'll see what that does in the longer term. But at some point, futures look pretty comfy going sideways for now. I just think down the line here, I think it's going to be important to remember that we are very tight on supplies and we haven't destroyed demand yet. And that's what this futures market's been so incredibly concerned about on this pullback is the future demand story, what these higher box beef values will do to demand in the long term. And we're not there yet. So maybe we can get a couple more opportunities in this cattle market. But from a hedger perspective, obviously incredibly high input costs. It's definitely going to be advised to try to take some risk off the table as producers start to place some more cattle again.
Yeah, and funds have liquidated a lot of their links, so hopefully that takes some pressure off of this market. The lows that we had November 10th, they're still holding. You think they're going to hold?
They've got a good chance to hold for now. Yeah, we've seen that first big flush of those funds getting out of the market, and seeing some sideways action here, I think, is a good story as long as beef cutout holds up where we're sitting at, and we don't have too many panic selling going along the line on the cattle.
And we'll end with the hog market, which kind of ended mixed here today. But I guess right now that market, what's driving that market right now? I know we have a few excess upfront supplies here, but is demand kind of holding up too?
Yeah, and I think pre-holiday purchases for mostly all proteins, they were pretty adequate this year. We've been impressed with pork cutout here holding sideways in those upper 80 levels. And I think that's represented some better than expected demand for that time frame. So that's good. The huge discount to the index right now compared to normal has been some concern. I know yesterday's move lower was a little bit of a shock to the marketplace, even with that large discount to the index. I think that was a surprise to many. And maybe that had to do with some concerns about the November 30th line speed waivers. Maybe that got priced in a little bit yesterday again, but otherwise, I think cash has been a little rough, which isn't uncommon for this time of the year, but something to keep an eye on, I think, Michelle. And pork exports have been decent, I guess, if you want to end on a positive note for the hog market.
Okay, we'll do that then. Thanks so much for joining us, Mike Miner with Professional Ag Marketing, and that's Markets Now.